Hello, Arizona, and welcome to this episode of 22 Minutes with Jason and Stefan. I am Jason Bates, and hey, it kind of worked. Hey, I'm going to bring you the lender side of things, and I said hello, Arizona, but really hello, the world, because we're on the internet, not just Arizona. What am I thinking here, right? He is Stefan Cotton. He's the second half of the show here, if you will. He is going to bring us. Oh, applause. Cue the applause. There they are.
Oh, there they are. All right.
There you go. We hope to not only entertain you, but also bring you valuable content that you can actually use when you're looking to buy, sell, or refinance property or invest in property here in the Phoenix metropolitan area. So if you're looking to do that, hey, we'd love to be your team of choice here in Phoenix. If you're first-time watchers to the show, which it looks like we've had a couple of recent new visitors to the show, thank you for being and participating and watching the show and commenting, liking, sharing our show. We really do appreciate that support. Thank you very much for that. That means a lot to us. It means a lot. We even had, if you want to communicate with us, we had a gentleman today who actually went to our Facebook page and messaged us directly from our page. So if you'd like to reach out to us, that's an easy way to do that. So
one of us will respond back. Most of the time it's you, right?
Yeah. One of us will do that. Hey, let's get to today's quick tweet code of the day. Today's Throwback Thursday. If you don't already know, we do this every day at 9 a.m. Arizona time, but today is Thursday, so it's Throwback Thursday. And Stefan, I think, is going to be asking me some questions. Maybe I'll throw a couple questions at him as well, and we'll kind of go back and forth and answer some questions. But if you have a question, you can see right below here, below Stefan and I, there's a Facebook post. I think that was from actually a couple days ago. But if you are watching this from Facebook, write a comment, and it should show up right here. So if you have a question, it's a great way for you to ask a question while you got a lender and a realtor both in the same room, so to speak.
Why not?
Participate. All right. Hey, today's tweet code of the day. Let's get to it. All right. This is important, I think, for a lot of people. All right. Be picky with who you invest your time in. Wasted time is worse than wasted money. And in our world, you can have wasted money and wasted time at the same time, right?
Well, yeah. I mean, that's the worst end of it. Way to be a Debbie Downer. You can have both.
Right. Well, if you pick the wrong team, is what I'm trying to say.
Right. Oh, there you go.
Yeah. If you get the wrong realtor, you wasted some time. Maybe took some time off of work to go see this property, and it's not really what you want because the realtor didn't listen to what you're looking for. There you go. Wasted time. Maybe they got you into a contract that you can't get approved on, and you potentially could lose your earnest money, that sort of thing. That's where I was kind of going with that one.
True. And you waste your time and your money. I was going to say at the very bottom, they had the hashtags like life quotes or whatever, and then one of the hashtags was funny quote. I don't think that's a funny quote, but
no, that's a serious quote.
Yeah.
That's a
hashtags.
Hashtags. Hey, before we get started here, I wanted to I know this isn't Reflection Friday, but tomorrow we're probably going to go over some charts and things like that. So I don't know we're gonna have time for this, but there was a situation. I want to say this is part of the Throwback Thursday kind of thing, because people will ask, "Hey, how quick can you close a loan?" Right? Or how quickly can we get under contract? Or how quickly can this happen? How quickly? What's the time frame? That sort of thing. It's kind of a loaded question. And I'm saying this because I had a client, have a client who took some time to get me their documentation. Then it pushes, we're up close, and this isn't particularly your client.
But it could be, for all I know.
Right. It's not.
My client did it too.
Yeah, client's not getting documentation to the lender or to the realtor in time, and then we get close to the close of escrow, and everybody's so stressed out. So when time frames are put in place, I think people got to understand it's a broader picture. Like, hey, this is assuming that you get the information to your lender fairly quickly.
Right.
You can't get it to them and then immediately make a decision or have the underwriter make a decision or any of the other check and balances that are put in place to
Right.
extend credit to somebody, they don't happen overnight. And so what happened in this other situation was the lender or the consumer super stressed out. And I said, hey, look, man, you had to get me this stuff not a week before close of escrow. I asked for it 3 weeks before close of escrow.
Yeah.
So then
What
it
was
puts a
their
lot of pressure on me then to push my underwriter. Then my underwriter's getting upset at me, and it just is an ugly situation.
So everybody out there, just turn in your paperwork. Always, always.
Yeah.
And then all the realtors out there, set up realistic timelines, I guess. Because when you write the offer on the house, everyone's excited. Did we get it? Did we get it? They send us a counter. Okay, good news is we got the offer accepted. So that's great. Now let's get all the paperwork we need for your loan.
Yeah.
By Wednesday. Like set up expectations by Thursday, whatever.
And I get it. People get excited. They get involved in the home inspection and other things. They got other things going on in their lives and so on and so forth. But when you're under contract on a home, one of the biggest investments of your life, super imperative that you pay attention to what's going on. Make it happen.
Yep.
Make it happen. Okay, so what do you got for me? You got questions? What are you gonna do?
I got questions for you. I'll start with one for you.
All right.
You ready?
I'm ready.
I'm looking at these questions I have prepared. There's a few of them. Okay, this is a simple one. I think it's a yes or no. I'm hoping it's a. I'm not going to tell you which way I'm leaning, but do you sell my information?
That is a no.
Okay, whew, that's what I thought.
No. Now I hesitate because I try to speak for the broader picture. I can't say that other lenders don't sell your information. Some lenders have other companies that they're affiliated with, insurance companies and things like that, and they may, trade that information to sell you other products. Banks are notorious for this, right? You do a loan with the bank, and it's not that they're selling it necessarily, but it may be transferred into other departments within the bank to solicit you for other services. So selling, no. I don't sell it, nor do I share it with anybody. But some institutions may do that.
So that was one of my other questions was, are you going to hold this loan or sell it?
So that's a really good question. And that one is dependent upon the lender. Some lenders, they self-service. That's actually a big selling point for a lot of lenders when trying to obtain business from a realtor like yourself, right? Hey, we service our own loans. Therefore, we don't have any overlays. That's a big sales pitch to realtors. I hear that quite often. Some customers, every now and then I'll get a customer that asks that question. Why that question isn't relevant is for exactly what I just said to you as a sales pitch to a realtor. Some lenders, when they're selling the loan to an investor, the investor, because it's third-party originations, wants to kind of restrict that loan product so that to ensure that they get good product from that broker. HUD a few years ago during the debacle, 2008, said, hey, we don't like third-party originations. We don't like brokers originating the file, then selling that file or that paper to a service provider, such as a Wells Fargo or whoever,
Chase,
right? That
US
Chase,
Bank.
yeah, whoever would service and you would make payments to as a consumer. That's a servicing agency. That lends itself to potential fraud because when they sell that loan, they're relinquished of any responsibility on the performance of that loan. And so this is where these liar loans and all these other things were kind of originated and then sold. And then now Wells Fargo, whoever's servicing that loan, if that loan goes belly up, they're on the hook for it. Meanwhile, while the broker is off on vacation somewhere.
Yep.
Yeah.
This is me drinking Mai Tai.
Yeah, riding in the sunset. So HUD doesn't like that. So that's why this question has become more relevant. This question wasn't really relevant 10 years ago. In fact, it was the exact opposite. Most mortgage bankers and lenders would say, hey, I've got 90 different investors that I sell this loan to, so I'm a one-stop shop. Come to me and I'll get your loan done, no matter your situation.
Right.
That has changed. That has changed.
All right.
So, yeah, it's good because then it gives you an idea of the overlays that may be involved with your loan. That's why that's a good question. Anything else?
Your turn.
Come on.
Well,
My
your
turn?
turn for me.
My turn.
That was a good
All
follow-up,
right.
yeah.
How will you keep me informed? Communication. What is your communication?
What is my communication?
How
Like
do you,
text,
yeah.
email, calls, things like that?
Yeah, like
Yeah.
some
So
people.
I have a team here. So a lot of times, you communicate with me directly via text, email, or phone calls when we're looking for the houses, and obviously face to face. I like to do at least one coffee before we get started to talk about your dream home, so that way I can get a good idea of what we're looking for. But after the transaction, after we get the house written and accepted, then you'll communicate most of the stuff through my transaction coordinator. Um, so there'll be another email that's asking for stuff or sending you stuff for e-sign that isn't as important to get the offer accepted, but it's important for our files. Um, or maybe there's an addendum or something that needs to be written if we're extending the escrow. That would be communicated through the transaction coordinator. But I'm always available anytime we're in a contract to just call up and chat or text and say what's going on. And then I usually try to set up the time frames too. Like here we are, inspection period. Then we do what we call the BINSR. And if you're one of my clients, the whole BINSR, BINSR part of the transaction. And then I said it usually gets kind of weird after that, after we do the BINSR and that gets accepted, because we've been working together for 2, 3, 4 weeks looking at houses. We wrote the offer, we went through the inspection. And now my part is mostly done. At that point, it's the lender, you, and the title company working together to get the deal closed. The next time my clients would see me face to face, unless they want to show up or meet up for coffee or something, would be at the final walkthrough to make sure all those repairs that we asked them to fix were done. And then most of the time I try to get to the signings too.
Yeah. Okay, cool. So communication is key to the whole thing, right? It's a very important question. And in fact, I think some realtors should even ask their clients, what's the best way to communicate with you?
Yeah.
Right? Text, email,
Emojis.
Emojis.
If you want me to try to communicate through emojis?
yeah, smoke signals, whatever the case may be. But because the communication has to go both ways. So you got to communicate with your lender, your realtor. Your realtor's got to communicate with the seller's agent, and the realtor's got to communicate back with you. So you've got to be available. You've got to be available
Right.
as well.
It's like this. Where are we at with, someone says, hey, where are we at with that? Okay, hold on a second. Hey, where are we at with that? This is the other side. And then there's 1 second. Then they ask their client, oh, okay, we're over here. Okay, we're over here. Okay, we're over here.
Yeah. Who's on first?
Oh, I
kind of
forgot to
thing.
ask about this. Okay, hold on a second. Yeah, we forgot to ask about this. Oh, okay,
I
hold
know.
on. Oh, they forgot to ask about this. Oh, yeah. Yeah, so it's it's constant communication is the key to anything. So
Yeah. Okay. So do you have a question for me or
I do have a question for you.
All right.
I have a lot of questions for you. So this is loan programs. I get this one too. Like, what are the programs that you offer? But so I'm going to ask you, what are your loan programs? But specifically, I get this one. Do you guys do VA loans? Do you offer VA loans?
Yes. VA, Veterans Administration loans. Of course, absolutely, VA loans. So really different types of products. You have your categories of conventional, FHA, VA, USDA. We're seeing more stated income starting to hit the market. We're seeing bank statement loans hit the market. We're seeing foreign national. Those were pretty popular a few years ago. Not so popular here in Phoenix as of late, but foreign national loans as well. So those are kind of the main categories of different types of loans. Then you have within those categories, you have different variations, if you will. So you have, your traditional 30-year fixed, of course. You have 15-year fixed. You have 5-year ARMs. You have.
I can do any year fixed, right? If I wanted to do a 20-year fixed or a 7-year
Yes.
fixed, I can do
Yes.
whatever. So
Yes.
when we say these 15, 10, 5-year ARMs, we can do whatever fixed you want, other than 35-year. I want an 80-year fixed. You don't do those, right?
No.
I wanna-
40-year fixed were pretty popular, but they're no longer available. Yeah, the 40-year.
I want one of those.
There was experimentation with 40-year fixed. Those may come back. We talked about wage pressure and things
Affordability.
like that. Yeah,
Yeah.
affordability. 40-year fix may be one of those solutions in the future. to help with that affordability. So with that, then you have different qualifications for each loan. So when somebody says, "Hey, what different loan programs are available?" Well, it kind of depends what you actually qualify for. Yeah,
Right.
that are available to you. So it's not as diverse as it once was as far as different types of products. And then with each lender has their own interpretation of risk, and that's really all that a credit score is, if you will, is an interpretation of risk. That's really all that it is. And it's a snapshot. I call it a Polaroid of your credit history, because I've had situations where I've had clients, a foreign national, as a matter of fact. I think he was from Norway or something like that. This is some years ago. Just came to the United States, established credit, opened up a bank account, had a I think it was like a 630 or something like that credit score. Got him a mortgage, and then literally I know you hate that, but 2 months later,
Well, 60 days. Literally 60 days later.
60 days later, his credit score was over 700 just because the mortgage hit his credit. And my thought is like, well, how is he a better credit risk now with additional debt?
Because he's got additional assets. Boom.
Yeah, well, yeah, that's arguable, I guess. Depreciating assets, in some cases, not in today's market, of course, but you know.
This would be me. This would be me dropping the mic. Boom, and then I walk away.
But 2 months later, a pretty significant swing in credit scores. That's why I call it a Polaroid, because bad hair day one day, good hair day the next day.
Right.
So credit scores are, not fair, but it's
Right.
that's what we use to qualify.
Right.
So many different programs out there. When lenders say, "Hey, we got this program, that program," and lenders are notorious for trying to be first to the market with a particular program. They're notorious for that because they want to try to gain some market share. They want to grab the attention of realtors, referral partners, builders, whatever. And sometimes that can be a little dangerous. So I think the question would be, what programs do you think that I best qualify for? I think that would be the question to ask you.
Because I asked the question, do you guys do VA loans? The answer is for veterans, yes.
Yes,
I mean,
for veterans.
You know what I mean?
But it could be for a veteran's, spouse. Could
Sure.
be in certain situations. So not necessarily the veteran, but the other thing too that I think some lenders get a little complacent with or whatever, they just immediately go to one product. Oh, FHA? Okay, done. And then they don't give the consumer additional products that they may qualify for. And we, as licensed professionals, have a responsibility to inform the public or the consumer about all the products that are available to them. So even though they may not be the best product for them, we still have an obligation to inform the consumer about the availability of that product. And I don't think a lot of lenders do that. I do that.
All right, question for me.
Question for you. How do realtor fees work?
Oh, I don't know. I'm just kidding.
I don't know.
I don't know. That's a good question. How do realtor fees work? So, if I'm your buyer's agent, right? If I work for you to find a house for you and we negotiate it, I get compensated. My fees are paid through the escrow by the seller's proceeds. Does that make sense, or do you want me to go a little bit further? I know it might make sense to you, but I'm going to go just a step further anyway. So let's say the seller has equity.
Come again.
Right. Oh, I don't know. We'll start off from the beginning. Oh, I don't know. But the seller will make money, typically equity, and then they use that money to pay for my services. So that's my fees on the buy side. On the sell side, it works the exact same way. I get paid through the seller to negotiate on their behalf, to get it on the market, to bring them a qualified buyer, and I get paid through the seller's proceeds. With that said, repeat the question just to make sure I hit all the bullet points. I think it was just
how do your realtor fees work? Realtor fees work.
So how do they work?
Yeah.
I mean, was that the question? I mean, like,
yeah, how do they work? How do you get paid? How does is it money out of my pocket? That sort of thing. So
no, right. Yeah. Some people will take a, what's that called? The check up front.
earnest money.
It's part of no. It's a, let's get the services started. I've seen that before, and it's on the contract.
Initial deposit.
Yeah. Sometimes they'll ask for that, and there's also some companies that charge an additional commission as far as like a broker fee of like $300, $200, $500 for these services. They get paid out through escrow. Those are fees I don't charge, but can be charged to you from the agent. And then the other part about the fees is when I get the fees, I don't get all that money. Some of it goes to my broker, some of it goes to my hourly employees, some of it goes towards my rent, some of it goes to the transaction coordinator. So even though it looks like I get paid a big chunk of money, that's for the team to make this thing a smooth transaction.
Yeah. So bottom line, if you're a buyer, it doesn't cost you anything to use a realtor. So use a realtor.
It shouldn't. Some of them do charge fees, though. Some of them charge an extra fee on top of it. That's what I was trying to say, that the BAC I've seen around here.
I've seen some of those, especially the first-time home buyers that target a lot of apartment complexes. They'll charge $300 or $400 in their contract. And if you're a seller, well, that's why we see some for sale by owners, because they want to avoid paying the realtor fee, because the realtor fee does come out of the proceeds from the sale of the house. That's where that money comes from.
It's just so ironic, because if I did a for sale by owner, let's say I sold the house for $200,000, I in theory saved $12,000 in commission checks to both sides, because $12,000 gets split to both ends. But in reality, what if the realtor could have got me a $220,000 offer or $230,000 offer? That $12,000 is not even relevant, because they made me $18,000 more in my pocket.
There's been many studies. In fact, I just saw one not too long ago, I think it was this week, that said, hey, use a realtor, you tend to get a higher price. This is what Open Door, OfferPad, these sort of things, this is what their niche is, what their spin on it is. Hey, save the realtor fee, we'll sell your house, we'll buy cash, we buy ugly houses, whatever. Eliminate these realtor fees, right? The reality is, though, your price, your home is going to be less, so you net the same as if you were to use a realtor. So, and in a lot of cases, you net even less by using those companies than you would get a realtor by using a realtor, even if you have to pay their commission. So, realtors are the experts. This is
what I always tell the listing side. They're like, well, what is your rate or whatever? And I tell them, my rate is 6%, they said, well, what about, someone else will do it for 4.5% or 5%. I said, well, if I can get you a higher net, if I can get you more money in your pocket, like a lot more money in your pocket than you would have got from a different agent, what does it matter what I got paid? Because I put more money in your pocket. That's extra money that you didn't have yesterday.
Right.
What's that worth to you?
There's a convenience factor in some of these things. Some of these other companies, they're offering convenience. And I'm afraid with the automation wave that's kind of coming our way, that property values may be suppressed a little bit because of that very fact. They're not really marketing your property. They're not really showcasing the property. They're not really, an expert. They're just saying, here's the price. That's it. There you go. And they're basing that off of maybe outdated data, Zillow, Redfin, that sort of thing, and not using the expertise. Expertise means, hey, you have a special feature in your house that may not show up on public records, but I know as an expert, because I deal with buyers every day, is an attractive quality to this house. Therefore, it is going to get a higher price. Views, property views, are a big example of that, right?
Right.
You can have great city views, and people are willing to pay more for city views. That doesn't necessarily show up.
On the golf course.
The
mountain.
Right.
Skyline. Yeah.
That's not going to show up on county records. I don't care about views. We reported 3 or 4 weeks ago, and I know we're running a little bit late here, so we'll wrap it up. But we reported 3 or 4 weeks ago about they're trying to get algorithms together about having a tree in your front yard, thinking that that may. So maybe they'll come up with a certain algorithm to combat that, but. My thought is initially there's going to be a lot of companies who aren't going to get that algorithm correct. We just talked about the algorithm and credit scores, but not going to get it correct. Therefore, it may suppress values with automation. Hopefully that doesn't happen, though. Hopefully it doesn't happen. All right, my friend. I think that's going to do it for today. We're kind of out of time. Hey, real quick. I want to give you an opportunity to talk.
Yeah. Oh yeah.
There you go.
Time's up, everybody. So this is exciting. We have what we call cookies at our office right now for this event. This is the part where I go over here. No, I go over here. Okay. So we're looking for some experienced real estate agents. We're looking for all types of agents that want to work. Yeah, there he is. Hey now. So come on over to our place today, tomorrow, 10:30 to 1. Meet some of the members of the team, get a feel for our office. Let's talk about goals and talk about what you need for your business, see if we have what you need, and then what I need for my business and see if you have what I need. Right. This is like, we're kind of like, photo bombing. Oh, you're climbing? Oh, I can't wait. You need to do a flyer. We're going to do this again tomorrow, but I'm going to have you do a flyer. I got some ideas. But yeah, come on over. Goodyear, Arizona, and that was the information. You can pause it at any point and come on down, but it's Thomas and Litchfield Road.
There you go. If you're a realtor watching the show and you're in the Phoenix metropolitan area or the West Valley in particular, and you need a team or you'd like to be on a part of a team, a successful team.
Or what does a team look like? I mean, because some people want to know what's the ends. I'll be what we call transparent and show you what we need and what we do for you.
There you go. Fantastic. Well, that's going to do it for today. Hey, everyone, thanks for being a part of the show today or watching the show to its complete, I guess, or to its fullness or whatever. Entirety. There. We really do appreciate that. Please share with your friends and family, especially if you're looking to buy, sell, refinance, or invest in property. We want to be your team of choice, so please reach out to us. We'd love to help you with your slice of the American dream. So until tomorrow, everyone have a great day, and we will see you soon. Take care.
Thanks.